All right, we're back. Looks like a pretty uneventful Monday. Just looking at the market's pretty flat on the ES and the NASDAQ futures down about 30, which is pretty low considering how much the NQ actually is. It's not even worth mentioning really. Um, yeah, there's lots of interesting things in the news. Nothing that I make any judgments on whether to buy or not, but I think the most important thing we can look at is what actually happened, what I talked about on Sunday. I did a video over the weekend talking about some CES for the folks out there that are just getting involved in investing, or maybe you've been trading for many years and you just can't really um, seem to break through or get consistent profits. Um, Maybe take a little step back and take a little look at what we do here. Uh, we're looking for consistency, no losses. Excuse me. Still got this weird head cough, and using this nasal thing seems to do pretty good. No, I'm not doing lines. It's just kind of like a Vicks vapor stick. Anyway, I'll go over this really quickly. This is what showed up on the scan. It's alphabetized here: ACV, BBN, BST onward. And we look over here to the side. I use Vegas. Um, these tell us more of the volatility of the underlying more than anything. So you can see that these top three here, 1.39, 121, 157 are your highest, and your lowest is going to be this 0.63, 0.648, 0.71. Now, of course, it's all relative to each week that the scan comes out and how well the stocks actually moved. So it has a direct impact on how we invest. What we're looking for as far as the movers. So we'll take one at a time. We'll go through ACV if I can find it. Um, See which account it might be on. So we'll look here, ACV. It's not on this account. Oh, where did it go? You'll be able to find it. ACV. Maybe we need to go a little higher here. There we go. So we bought that this morning. You can see with the little blue triangle there, it tells you where you bought it at. And then that's just annotated by Interactive Brokers. And you can see that our target profit is exactly the amount plus 20 cents based on plus $2 plus 20 cents. The 20 cents is there to cover the dollar commission. You get better understanding the more you watch. I know it can be confusing. This is meant to be boring. It seems like the more boring it is, the better it works. So, the most boring is you take some money, throw it in the market, and hope for the best, right? But that's not a strategy. That's wishful thinking. So when we have things like this happening in the market, um, our scans show us something. We'll go into BBN. That one activated today, so we were able to buy that. We buy these on the close. And that's one that we already had from before. So it may have gone into another account. And mind you, I work a lot more than just these three accounts, so that's why during the day it's hard for me to stay on here all day because I have to keep up with all the other accounts. We're just constantly managing. There you got BBN in this other account. And so that activated. You can see that it bought today by that little blue tick off to the off to the right. I could change that, I think, somewhere in there. But either way, you get the idea, so that the actual average cost is a little bit higher, but that's our target price up there at 28. So it's the amount of the dividend away, right? We're trying to hit that before a year's at. That way we'd get that $1.40 for the year. And when you look at these max shares. Just remember, this is based on a 100,000 account and below. So we're trying to reduce our risk through the size of our portfolio. So what I do is I only buy 10%. Now, you can max out at 53 shares and still have under 100,000, but each time that you buy, it can only be in 10% increments. So you basically have 10 buys. So that means you can go quite a ways down in price or in value before you would actually hit that max shares. But it does happen. And then, when it goes up, you don't have to move very far, correct? Because you've dollar cost averaged on the way down. So we look at this chart, is BBN. Just go ahead and put our Fibonacci in. And this Fibonacci, I use it as a tool. That's it. It's not meant to tell you where anything's going. I'm just using the 50% retracement as my next buying opportunity. So 25.74 would be the next one. So I can put an order in right now at at 25.74. We look at the max shares. Max shares is 10, so we can go 10. Already have it there. Limit at 25.74. We transmit that. If it comes down and hits it, now we have 20 shares. That's the only way we're going to buy. There's only two things that can happen in the market, right? It can go up or down. So if it comes down, this is where I want to buy again. If it continues up and hits our sell limit, hey, we take a profit, we move out of that thing. In the meantime, we collect dividends. It's a monthly dividend payer. This is a CEF. All right, so we'll move on to BST. Let's see if that one triggered. We'll see it there. And there it is right there, BST. We're going to look at the chart on it. You can see where it activated, or a little below water on it. And we already have our, actually just have an alert in here right now. But if I see any kind of movement like halfway, I'll switch this to a limit order. Just I don't want to have too many limit orders in there because it actually takes that amount of money away from your cash account and just kind of holds it there until you're ready to do it. So it's best just to leave it until you're getting close. Of course, you can have a spike down and it hit, and of course, your dollar cost average to that next move up. So let's see, BST. We already have everything on the chart that's needed. I'll go through these pretty quickly because BSTZ. BSTZ is another one. Okay, so we can put in our 50% retracement. Now, if you notice, these things take a while to move, right? They're called CEFs, closed-end funds. So they don't move that fast, but they can. You can see these spikes, you see a spike there. So we know that max shares are 52, but we're just going to put an alert in. We'll get rid of this old one here. I'll put another alert in at 32.37. That way we don't have to pay attention to it. As we know where we're going to buy it at, or approximately, right? So we just move on to the next one. Everything's set there. DFP. There's one right there. Is this one today's? No. Yep. There you go. You can see the little blue triangle telling us where we bought at the dollar. So that's our average cost. There's our sell limit. We already have our 50% retracement in there. Here's 100% retracement down at the bottom. On to the next one. LTC. LTC. You can see bought it on Friday's close. That's the strategy with the slow movers. Especially in the monthly pairs. We need to put an alert in here. 37.31. Okay, we just wait on it. If you don't have any kind of patience, this is probably not going to work for you. But if you have patience, you'd be surprised how well this works. You're constantly moving stocks in and out of the market and taking these small profits. Now, of course, if you have a small amount of money, it's going to take you time. You can expect between anywhere from 8 to 12% every year. So if that's what you're making, it's going to take you about 7 years to double your money if you don't add any money to your account. But hopefully you're working and you can continue to, fund your either retirement or your cash account. So it looks like we got everything on there except for our alert. So I'll stick an alert on there. That's 77. So it gives me the option, if I have the alert, I can use a trailing stop if it touches it, or I can just buy it on the limit. It's just kind of, those are the two options that you have. I mean, there's no, or you could do market, but sometimes that doesn't work out well for you because of the spread. And there's a 3-cent spread there, so you end up probably paying about 3 cents. Now, it really doesn't make a difference that, if you have a small number of shares, but when you start talking, 1,000 shares on the trade, yeah, it starts to add up pretty quickly. So you want to try to use limit orders as much as possible. All right, what do we got left on there? PKO, RMI. No, I don't see it on that one. Let's see. RMI. Okay, that's last week's. That's a different account. It doesn't look like RMI is hit because it just went straight up. Well, not on that account, but it looks like it just went straight up from there. But let me see where that's at. Yeah, and then ZTR. I think that one. That's an old one. I'll go over here to this one. ZTR. Yep, there's the blue triangle, so we know that's the one that activated today. So we know what our sell limit is, and then we can put in our Fibonacci. Get rid of these. So our next buy point would be at that 807 mark. We'll just put a alert in there. If it comes down, hits it, then we just double the amount of shares we have, and we just double the amount of dividends that we get per month. So it's important to remember, like I said, this is, when you have a small account, this takes some time, but our whole objective is not to take any losses. And these 3 accounts that I've been showing everybody, they've had no losses in, let's see, 9 months. 9 months of no losses. So, if you follow what I'm doing, you should come up with the same results as long as you pay attention to the rules. There's no magic here. There's no fangled gadgets. This is all math. Try to keep it as simple as possible. That way we don't make mistakes. Of course, I'm human. I can make a mistake. I can enter fat finger, put in the wrong digit, buy 100 shares instead of 10. And that's how I could come up with a loss if I get in there and change it real quick so I get back to where I'm supposed to be. But I'm very careful with my orders. I double check before. It's like when you're measuring something, measure twice and then cut once. So that's what I do. I check everything twice before I do it. Sometimes I can be going pretty fast here and you might get lost in it because it's just everything's flashing around, but I've been doing this so long, you know, and I do so many more accounts that I have to be fast. There's no way to automate this. I'm sure there could be, but the cat would get out of the bag. Um, this whole system is set up for never-ending payments. You just constantly on a winning side, and that's how you grow wealth. You don't grow wealth by taking losses. You take a loss. There's some theories out there that, you know, your gains have to be X amount bigger than your losses. Well, I mean, how about just no losses and then take small gains and you don't have to worry about it? Of course, you can have a runner too. You know, wake up one morning and something just jumped way up. If that's the case, you have options. You can either just close it out, or you can, you know, trail it. Sometimes you get, you know, company that decides to make a split. So it makes sense to have ownership of more companies so that you have that ability to snag those splits when they happen. There's splits happening all the time, but it's usually companies you've never heard of before. A lot of reverse splits, but there's all kinds of resources out there to find these type of things that are occurring or maybe in the future. I'm not so worried about. I don't want to spend my day looking around for, it's called speculation, you know, speculate on something. What I'm interested in is pulling dividends out of the market constantly. These accounts, I'm not adding any money to these, but if I was to, I would show you the amount and how it affects the overall cash value. The cost basis is what you're making your dividends off. So right now, this particular account on the screen is showing you, you know, 6.06% per year. But that's an average, right? So at 6%, just take a calculator. 21,134 multiplied by 6%. That's going to give you $1,200, right? 10% would be $2,100. Just give you an idea. You're like, well, 1,268 bucks. That's basically $100 a month on $20,000. We go over to another account, and this one looks like it's got a few more positions. It's earning 7.59%. Just at this moment in time, it's constantly changing, right? So as the stock market goes up or values go up on any one stock, your yields go down. So this is a yield that we're looking at. Oop, you do it by percent. 34060 times 7.59%. So that's 2585. So now we're looking at about $4,000 on just two accounts. Now you go over to another one, and this one's bringing in 8.85%. Now 854 multiplied by 885%. This means is if nothing changed, this is how much money you would make. Like if the market doesn't go up, goes down, just right now, you go a year later, this is what it's paying. You know, but there's so many variables in the market and it's constantly changing. The whole idea is these are numbers that you're going to pull in on a consistent basis so you can see the snowballing effect. And with the trade, we're not even talking the amount of trades that come in. And you look at how many trades, and each one of these represents a dividend amount for the year on that underlying, and say, well, you only sold 3. And so, you know, okay, it's $6, $7, you know. Multiply that by 1,000 trades a year, or even by 281. That's another $2,800 on one account. So the whole idea is to get number of occurrences, just constantly pulling it in. And for your own information, realize profit and loss. The blue represents your profit. The loss would be in red. You won't see any red in these columns. Our system works in such a way to not have losses. We just constantly, we're working with small amounts based on the size of your account. The larger your account, until you get over 100,000, we have other accounts that are 20–30% of max shares per trade. So you get there a little quicker, but the whole idea is we're working within a 6-month time frame. One thing that, a lot of videos will show you is a lot of flashing lights, a lot of fast movement. You get down to these minute charts. These are weekly charts. So, I don't know where any of this is going. It could be going up, it can be going down. But what it never does is just sit still. Things are constantly being traded. So we're taking advantage of the movement in the market. Because we don't know where it's going, we have to have some rules. And those rules set you up to win on each time, because each stock moves differently. Nothing, I'd be lying to you if I said I knew where any of this is going, because I don't. But we look at all these different stocks, and they each have differences, different dividends, different prices, different markets. Everything's different. We look at something like this. It's been in this account for some time, it looks like. So we know where the 100% retracement would be at. It looks like it's already hit the 50. Yeah, so it's already hit the 50% retracement. So you can see that's your 1140. That's your average cost. And it's still not at max shares, so you can continue. You get 112, 150 is max shares. So you can continue to buy and invest in that based on the scans, based on what the scan produces for you, if all the conditions are met in the scan. So when it comes up on the scan, that's when we execute trades. Now all I'm showing this week is going to be closed-end funds, and you probably won't see any of these actually get traded except on the buy side. Might be a week, might be a month, might be a year before these actually close up. But in the meantime, what these are generating, if we look at it, we can add them up. If we get 5 shares and just say all of these are new, you can take 5 times 2, right? Because that's the dividend for the year. So there's $10. There's 10. That's 14. 8. 5. 14. 6. 14. 12. 17. So you add all those up for the year, and that's going to come out to an average yield. So you can simply come down here. How many do we have? You know how to use these. You can do a sum, right? Sum of that, and then all you have to do is divide it by how many you have. You got 1, 2, 3, 4, 5, 6, 7, 8, 9. Divide that by 9. You're going to make, just on these trades that we did for this week, if you hold all of these for 1 year, the amount of money that you put in is going to make 6.9%, 6.09%. That's if none of the dividends change. Some can increase, some can decrease. Sometimes you get extra dividends at the end of the year. You just never know. The whole idea is we're trying to target these dividend yields before the year is up. In a lot of cases they happen. Sometimes they don't. Sometimes you may sit on them for a couple of years, but in the meantime, you're making these percentages on your money, but you're not putting all your money into one asset. Meaning, oh, a phone call here. Excuse me a sec. Hello? Sales call. Block that. So where was I at? So yeah, you can add it up, take up your dividends, take out how many, how long it takes you. I mean, we don't get into all the minor details like that. All I know is from this point forward, my money, whatever I've invested, I'm making 6.09% on it. If you're trying to keep your money in a bank or a CD or something else like that, it's pretty hard to make any money. It'll take you a long time at less than 1% to double your money. Here, at least, if this is all I had to invest in, maybe 13 years, I could double that, whatever I put in, and this is a small amount of money. I could add it all up there, but you get the idea. Take a screenshot or pause the video, add them up, and see how much money I had invested in there. But that's just for this week. Remember, we have 52 scans through the week, so we're constantly in and out. And over time, you'll see how this grows. It's not something that's going to happen overnight. I mean, you'll see the amount of trades that we have, constantly buying and selling, always selling at a profit. And some of these, $2.89. So if we look at glue, right? See where that was at. We look at glue. We can see that I need to take this off here because it's no longer in play. So that's sold. But you can see that we bought it somewhere up here, right? Because it didn't have to move much. But all we're looking for is that small amount of dividend amount, and that came to $3. So it was actually probably just one share because of the size or the price or the value of Kalu based, and you have to take into consideration the size of the account. Still under 100,000, so you got to go 10%. You look at the max shares, you use 10% of that, so it's usually going to be below 14. If it was 14 max shares, you just average it out, you're going to be 10% of that's going to be 1.4, so you just round up, or you round up if it was 1.5. In this case, you just go 1, so now you'd have 14 occurrences. But remember, max shares constantly change. It's one of the best ways I found to protect your capital and continue to have a constant income stream, or cash stream or shekel stream, whatever you want to call it. It just keeps on growing. But you can tell, I work with thousands of positions through multiple accounts, not just these ones that we see here. So it's an ongoing thing. I mean, if it shows up on these, I might have bought in this account and another account, and then maybe even another account. We just don't know. But what it's allowing you to do based on the size of those accounts is you can keep your risk at a minimum. The majority of these positions are less than 1%. So, I mean, to be wrong on everything, probably the end of the world would be that condition. That's if they all went out of business at the same time. So, I mean, it's possible, but it's not probable. The main reason I don't do growth stocks is because they don't pay dividends. And yes, they're volatile, but if I get stuck with one, what am I going to do? Nothing I can do. You just got to sit and wait. People chiming in, letting me know they've sold something. Well, the beauty of this system is you don't have to be on here, all through the week, 24/7, just stressing about where your portfolio sits. Just know that, that your dividends are coming in, and if you add money to the account, if your account's small, say $10,000, you might be, all your money may be in the market, and you're making that 10% for the year, but you're going to see it continually grow in your cash account. So if you want it to grow faster, of course, you're either working, but if you want to take a shot with with $10,000 and go buy an option or play the futures market, chances are, if you don't have a lot of experience, you're probably going to lose that $10,000. Yep, we got about a half hour left in the market. Oh, the heck of a lot going on. Got some oldie but goodies in this account. You can tell by the size that these have been in here a while. Anything that's, at max shares or above, they're just making dividends and they're just kind of floating around. You can see if it's only $62 and you've got 263, that had to take a long time to get up to 263. Okay, so you're making basically $1 a year, so $263. So if this has been in this account any amount of time, let's say 2 years, then are you actually down $62? No, it's already well past that. Let's take a look at the chart. I don't know when it was bought. It's impossible to tell. So it's continuing up. That doesn't mean it can't stop and go the other way. But look, because it's over max shares, 263 versus 240, you can't buy any more of them. Even though I've annotated on the chart, it's just habit, to make sure that if something happens, as we get up here, if it goes, let's say 10 cents above, I can sell off 23 of those shares to bring it, to bring it back in line with the 240, and that cash goes back into the cash account, and you just still didn't take a loss. You just hold on to it, and maybe it goes up. You notice we don't have a sell in here yet because we're not even close, so it would be 94 cents away. You can see last year it was a little higher. It was 99.26, so just under $1. And because it's been in there that long, and it's below $1.20, I wouldn't be buying any more of these. So there's the rule. There's a couple rules right there. Once you hit max shares, you can't buy any more. That means if you start going over, it's because something's happening within that stock that's allowing that max shares to come down in the overall portfolio. So you need to adjust once it goes positive. But you don't touch anything until it goes positive. Lots of little things here. There's a learning curve to this. Usually about 6 months, you probably have it down pretty good. Um, my better half trades this, and she's constantly getting mad at me because I hadn't told her everything. It's not that I hadn't told her; it's because she don't remember it. So it's hard to get her to put her orders in because it's too easy. She puts her orders in last minute. When you can do this on a Sunday, and the only thing that you have to do every night is to look, or in the morning, is put in your sell orders after you establish the position, because you know what the position or your sell limit's going to be. It's always going to be the dividend amount away. Like anything else, and you'll soon find out that this is actually a very simple system, but it's actually very intricate at the same time. But yep, more time it goes by, there'll be more people that decide that, they like to check this out after they get walloped. I think once we actually have the big downturn in the market, normally we'll get some kind of pullback here and there, and people reestablish positions, or a lot of people, what they'll do is they'll have stops in, and they'll stop it, take their little losses, all that money they gained on the way up, and then they got that stop. They don't want to lose too much, and so they goes down even further, and then they're stopping themselves up, repositioning. They don't really understand why they're doing it, and because they've learned something somewhere, and a lot of it's just hope. There's no real strategy behind what they're doing. Trading trading for a living is a hard job. You can make money doing it, but it's got to be a full-time job. You can't do it part-time. I actually, trade quite a bit, but I'm not trading in the true sense of the word. I call it travesting, because you're trading to invest. Once you get up to a million, 1.5, it becomes a lot easier. Um, the size of your positions and what you actually want to make. I mean, you can stay in the market longer. There's so many different ways to make money in the market that, if you don't want to watch this on a weekly basis, you could, do it on a monthly basis. So 12 times a month, you reorganize your portfolio and you say, oh, hey, I'm up on this one. I'm going to buy some more of these ones. But you got to have a plan. You got to know why you're buying and, what your risk is. But if you had $1 million and just decide, yeah, I'm just going to go all in on Coke, well, that's fine. You'll make 3%, 3-4% a year. That's $30,000-$40,000 a year. Depends on what the dividend amount is, but nothing wrong with that. But that's if that's what you want to do. But just remember, your risk is in that one stock. Chances are Coke's not ever going anywhere, but it's possible. Anything can happen. A lawsuit, who knows? But I would rather be spread out. There's there's people on both sides of the argument. Only being one, the others are like spread your spread your cash out. I want to own all the companies, at least in some fashion, certain amount. Can you imagine if you owned every dividend paying company, how much you could make per year, and then just target the dividend amount for your strike price or your target price to sell? I mean, it's a simple equation. I mean, you don't have to really think too much. These companies that are paying dividends, um, they're making money. Last thing you want to do is invest in a company that's losing money because the dividends are going away. Well, this way you're protected because you're only using a small percentage of your portfolio to invest in any one stock. You can't get hurt. Like the hurt's going to be so minor that it would be like, okay, hey, this one here I lost 131. Well, what's that the percentage of this portfolio? We take $131. I don't even know what this is, NHF. Don't care. 131 divided by 21, 134. Oh, 134. Okay, multiply that by 100. That's just over a 0.5%. 0.619, say 0.62% of your portfolio. How many times can you be wrong? Or how many of these companies that you own can go out of business before your account explodes? It's quite a bit, but if you've got all your money in that one and you're just unlucky and you had all that 20,000 in there, it's gone. That company goes to zero. Maybe you salvage something out of it. So it's important to stay diversified in my mind. I see both. I think as you get more money, it's even more important to be even more diversified. So you're not going to make a ton of money off $10,000. And I have a lot of people ask me, it's like, well, where can I put this? I want to double my money. And it's like, well, I mean, risk has a price, and I'd rather, what's your time horizon? If they want it tomorrow, I was like, well, the only way you're going to get that is if you go buy a lottery ticket, and your chances, look at your odds, 175 million to 1. Let's cut it in half. You know, it's just it's a pipe dream. And when you hear these high percentage winning trades from the penny stock traders, that's all. They ain't lying, but what's your actual take? I don't know if any of it's real. I've never seen an actual statement from any trader in my life. I mean, let's see, one guy I know that trades that I think is legit because he actually shows his account performance. Yeah, but he's a multi-millionaire. So, and all he does is trade futures. But he's been doing it the majority of his life. So it's kind of hard to, you know, listen to anybody and say that they're serious, because there's so many ways to play people online. But if you really want to understand investing, and a system that just makes money, and it's not going to, it's just a consistent profit. It's kind of like the credit card that just got the daily interest rate on it. If you don't pay it off quickly, it just keeps on growing, right? That 20% adds up quick, and you're like, man, I just paid on that, and my balance is still the same. So look at it the same way here. Just say that you're on the other end. You're getting paid from all these companies to own a small portion. You got to be realistic. If you've only got 20,000, you can be spread out this much. Look at all of these. How many are here? 2, 4, 6, 8, 10, 12, 14, 16, 18, 20, 22, 24, 26, 28, 30, 32, 34, 36, 38, 40. So 40 positions. I'd still have cash. Still got 9,000 to go back in. Because the scan allows me and shows me, hey, you can't just keep buying. It's based on what the scan allows you to do and the rules. The rules are key. You don't follow the rules, you get to pay. Let's see what's going on. See, now we're down on both. Yeah. But still, it's flat. Ain't nothing going on. You say flat day, but it's good to learn a little extra. If you get interested in that, you can always email me at t1reconrider@gmail. No, no, no. Little pup trying to chew on my power cord there. But yeah, we got about 19 minutes. You're not going to see any big jump in the market. All I'm really looking at is this time of day is what's actually losing losing ground. So when I see something like this was bought this morning, and it's actually up a couple bucks from where it bought, because that was a DCA that came down, hit the 50%. So I put uh, put another limit order in down on the 100% retracement. So we're like, all right, so everything's in the right position now. So now instead of 3 shares, we get 6 shares. We're looking to make the profit for the full year, and don't know how long we've had it, but if we can get that $1.76, by that's 8. So this is what they look like every time you do that. So that's the last 7 days. So it's kind of hard to. That's another account, and each account kind of moves in its own way, you know. So the bigger the account, the more money you're going to make, of course, because now you get into the 20%. You have more positions. You get up to 100,000. You're going to have definitely more positions, but if the market's down, you're probably not going to have a lot on the scan. If you have a market that's up, you're going to have quite a few on the scan. But it varies from week to week. There is no set amount that's on the scan. And for educational purposes this week, all I'm working on is the closed-end funds. You see how these work. You get into it, and you maybe spark your interest on how to make more money quicker. These don't normally trade very quickly through the week, and you can see just by what we talked about earlier. So it's not exciting, but it's consistent. And when you're not having any losses, you just have to be patient. So like this is oil BP, it's just like a big jump this morning. You can see from last week to the open here, almost $2. Yeah. So it's up. This is a situation here where I had sold a put maybe 2 years ago, and it's been down for a long, long time. So you can see it's a negative situation there, but it's been producing $1.26. So about $126 a year in dividends. So it just keeps subtracting from your unrealized loss, but it goes straight into your cash account. I don't reinvest dividends because I don't want to buy anything higher than my average cost. So in a situation like this, it might have worked out well and I kept investing those dividends, but that's not my rule. So you can second guess yourself all day long. The only thing you got to remember is making money, pulling dividends out of the market. You get your share of it. These companies are paying it, so why not be a part of it? You know, now this one I could sell this right now, but that's not the objective. The objective is to get that full amount for the full year, but I've been waiting on that maybe on this one. I don't know. Looks like this is at max shares. Well, I know it is because it's on that chart. Yeah, 84. So it's at max shares. Now this number, max shares, can change. There's a lot of variables that go into it. As we come down through, say McDonald's, this is one that I probably bought and sold over the last couple of years. I love these, this volatility that you see here. And these are weekly, so you're talking like a $15, was that right? 7 to 27, a $20 move, up and down. It's crazy. But that's where you can be in and out and take your $5.16, multiply that by how many times does it hit. You can go back and look in the history, but if it's not on the scan, then I don't touch it. So this one's max shares, I know. 45 or 47, yeah, so I could actually get rid of 2 shares right now if I wanted to, but it looks like it's close enough there. I mean, it's a personal call. 2 shares isn't really worth messing with. You're going to put $50 back in your account. I mean, why not just let that ride for the extra $2, that you'll make. But you would be protecting another $50 because that's what you're over on the max shares. So it's important, I would follow the rules in the beginning. When you see a large spread between your max shares and what you actually have in that account, then I'd seriously consider, unloading those additional shares. So we had a couple sells here today on this account, HRZN. That's a, what do you call it? Take a look at it here. CEF, see it pays monthly. Right, 88 shares of the max, so it's sold up there. So remember, the scan's going to tell you when you can get back in. If this shows up on the scan again, you'll be involved in it. But otherwise, on to something else that's actually on the scan. Remember, $1.20 is the minimum that we want to have. This one here has been in this account for a long time. Probably the reason why we stopped buying it and it's just become a dividend producer is because it's so low. See, it dropped down on January. Is that right? Well, it's actually gone back up a little bit. It was down to 4 cents. Now it's almost 5 cents per share. So it's not very much, right? But you got 200 shares at 50 cents, so about $100 a year on that. So I mean, if you had it any amount of time at all, you're still pretty even if you really want to get that crazy with it. Well, this one too, this is another good example of something that's coming up back up to its positive region, and looks like we got 167. Now this would be a prime candidate to unload about 17 shares, but you got to do it when it's where you're still going to be positive. You just all you're doing is taking that money back out of there and protecting it. because it could go up to that 875, or let's say go about 10 cents higher. That would be 10 cents higher, would be $1.70, $2. So that's going to cover your trade, and you get a little bit of profit there. But the whole idea is to protect the capital, because you don't know if it's going to continue to come down. But now you can target, and in this case, this thing isn't even paying dividends, right? That's why you wouldn't invest anymore, but you definitely want to remove some of that. Now maybe it starts paying dividends again. But as of right now, if we look at that chart, yeah, it paid back on December 14th. Maybe it's paying quarterly now. I don't know. That would mean around 314 or something. So it's not really worth messing with that much. You're only down $45. Looks like it's been in the account a while. Let's look at some of these ones that are kind of sloping down. I don't care where this price actually is. And that's the beauty of this system, because you just don't care. You don't make predictions off of, hey, it's doing this, right? That's a downtrend. And I don't even look at that way. That doesn't mean anything that happened in the past. It's like, it's not untrue, but what's your structure? What's your, what are you basing your decisions off of? Just because it's going down, it's a downtrend? I mean, it's paying dividends, right? So it's for me, but if it doesn't show up on the scan, then I'm not interested in it. This thing's already been dollar cost averaged because we have 6, so it looks like it's 3. It might have been 2 at one time, who knows, or 222. Now it's 31. But I hadn't looked at this in a while, so we don't know what it hasn't shown up on the scan, so I don't really worry about it. When the scan comes up, this number could have changed. Could be higher, it could be lower. So it's not necessarily going to be 3 shares every time that you trade it. You just don't know. But in this case here, we're just waiting for it to come back on the scan. If it comes up on the scan, hey, we'll definitely buy it, Good's another one that keeps on traveling up, another monthly pair. And spread out. So we're trying to get to that $1.50 mark. Just multiply your 35 by $1.50, and that's going to give you what your profit's going to be. 52.50, so we're at 37 right now, right? So it's going to continue up. You can see we got a trailing buy in there still on that one. This one just doesn't move very much. I have no idea what they do. Looks like it's coming close. So it looks like the trail is going to be 13 shares it's going to buy, and that's going to put us at 139, and that's probably going to be over. Yeah, so it'll be 6 shares over. So we just let it do what it's going to do. This just keeps paying dividends. It looks like the next one is due on February 26th. That's 10 days from now, and it's paying 9%. Not too bad. All right. You gotta remember, the whole key to investing is when you see these columns in the middle that are showing you unrealized gains, it's going to take you a long time to get used to working with negative numbers. And you see that, negative 737 down here at the bottom. And ORC. And you're like, okay, of course I'm not investing anymore, but let's just look at the chart, because you can tell 191, I get 296. So you can't invest anymore, but it's making 13.5% on your money. How long does how long does it take at 13.5% to double your money, which is this value right here? 242. So if we take it and we go 2,442, because that's what you have invested, multiplied by 13.5%. That's 329, right? 329.67. So if you divide, was it 2,442 divided by 329.64, basically 7.4 years. And you'll actually have twice that amount of money. So if this has been in the account just 3 years, this is a positive value. It's just showing negative. It means that you've actually pulled in half the 2,400, if that makes sense. Some people are confused by that because it doesn't actually. You can have there are certain platforms out there that I think like Tasty Trade or something like that. That every time that you pull in a dividend, or yeah, every time you pull in the dividend, it actually you can show it where your unrealized profit and loss is coming down. It's an interesting feature. So it's just something to keep in your head. It's hard for a lot of people to get their heads around it. And we got about 5 minutes left. Don't see any action going on. We'll take a quick look and see what's left. Some days it's so busy, that you knock all your stuff out. And if you have a cell phone, you have any of these platforms that can email you. It's like, hey, we just made a trade. You go back in there and put your sell limit in, and that's all you got to worry about. Look at it, learn it. I try to help as many people as I can with this because I think it's important. I love this stuff, Bitcoin. Of course, I got lucky with a lottery ticket years ago, and it's coming up on $1 trillion for Bitcoin. Trades above 50,000 for first time. My opinion, that this is probably going to be worth, 1.5 million, 2 million for Bitcoin. I don't know. I've had it since 2009. I'm just willing to sit on it because it's a lottery ticket. I can go buy a brand new Tesla for less than a Bitcoin right now. It's all about, what you actually need. I don't need a Tesla, but some people might. If you had it invested in it back then, that was many, many years ago. And I'm not going to say I knew what was going to happen. I'm just saying I saw it as an interesting opportunity. My little guy's running around there. Okay. Got a little pup here with me. He's about just over 8 weeks old, so he's still figuring things out. Sleeps most of the time, which is good, but late nights. You get cruise lines that are, I don't know why they're starting to pick up. There's something about Norwegian cruise lines saying that they'd still be out of service. So doesn't matter. This one stopped paying dividends, so therefore, we stopped investing. So Lockheed Martin has been faltering for the last couple months. Just fine. They keep in. Hey, quit drinking too much water over there. Hey, get out of there. Of course, they don't listen. So, but see, we're at max shares at 4, and that can change. Hopefully it changes, and it doesn't just keep jumping up and down. Once it gets up a little higher, maybe we can buy another one down here. But as it is right now, we have max shares. Our average cost is around 360, so we're not going to be doing like 360, 62. So, I mean, we got $1,400 invested, but it's fixing to pay us again another, what, 12 bucks just for sitting on it. Um, might not sound like a lot, but when you start talking thousands of different stocks doing the same thing every day, and you know, there's a lot of different strategies on how to pull money out of the market. It's just what are you willing to do and how patient are you? But if you're looking for that quick fix, man, they will slap you down. They'll take your money. And don't get me wrong, there's some people that make some serious money trading, but I don't know any of them. And I've seen lots of shysters out there. But you can watch this live. I try to get on at least twice a day. Used to have, when I first started this channel, I'd get on for several hours from start to stop, and just to give everybody an idea if they wanted to see what a full day looks like. But like I say, it is boring. So, hour and a half, 2 hours in the morning, basically half hour to an hour in the afternoon, depending on how busy we were. Other than that, the market's closed. Looks like just another day in the market. We'll have some dividend payments tomorrow. We'll talk more about it in the morning. Hopefully that helps somebody. If anybody has any questions, remember it's t1reconrider@gmail.com. If you want to shoot me a mail when you got questions about how the system actually works. Majority of it is just kind of watching the scans. I do put up parts of scans usually toward the end of the week. I'll put up a scan, but it doesn't really help you at the end of the week because it's good for only a week. And you use those for your entries based on the size of your accounts. You'll figure it out over time. But I don't give any investment advice. All I can do is show you what I do, and then you can learn from it. But you've got to be patient and you've got to be willing to learn. You got those two things, you can get this lick. I've trained many people on this system. You won't see a bunch of people in this room all the time. Sometimes it's usually just new people that are coming in. There's people out there that just, they can't sit still for 5 minutes. They just got to drop some cash in the market and hope for the best. I like dropping cash in the market, especially if I'm going to get paid. But I'm not a speculator. I'm an investor, but I trade a lot. So we'll leave it at that. Have a good night and see you in the morning.